What I'm watching today, it's a Tuesday, so we're starting off a new week. Yesterday we ran the Boston Marathon. Amazing. We had a American winner for the first time in, I believe, 20 plus years. I think 1983 was the last time. So 22, 23 years since we had a U.S. winner. So congratulations. We're looking at crude oil right now. Now this is the June 2014 contract. So I'm going to real quickly reload historical data, see if this is a true gap or just a gap in my data. I've got the DSR levels applied. You can see here that this 102 to 102.10 level has been pretty significant structure support. Obviously, we're going to look at any test of that 102 as a potential long entry. Could be a nice opportunity to buy some puts or some calls actually on USO as well. All right, so double top right here, the DSR level sets off this swing high. We drive through that by about 15 cents, and then we get our turning point. 2, 3 on the fourth bar, we get a black tip. So this right here is an aggressive short entry. We were overbought extremely as we rallied into this 103.52 handle, which was previous structure resistance. And then from the 52s, we rallied to 04. Okay, so again, average true range on the hourly chart at the time of the signal around, looks like 25 cents. So we would have needed the full 50-cent stop on that particular trade. Now, we've rolled over. We came all the way back down. Beautiful long entries here at the 102.20s. So we had a nice winner here for a little over $1. A nice winner here with trend. Here's a DSR sell counter trend, 103.80s. We pulled back right here. 80 cents within that same trading session. Again, note, there's a small test right there, small test right here for the sell. Here we got a really nice extreme reading on the RSI, and that produced a short entry around 103.80s. So those of you that were short, here's our one-to-one measured move. Risk 60 to make 60, and then let the balance run. Should be attaining your final targets down here. Now again, grab your ruler. DSR level sets here. We want to buy the retest, and then again the one-to-one measured move right there, and then the balance of that trade we would have taken off right here as we look to roll short against that previous structure resistance. So you see that's 145 ticks or $1,450 per contract. Now the market makes a new structure high. Our DSR level sets off that swing, and then here's a short entry. There's a quick 80-cent move, $800. We retest right here, but that's at 6 p.m., so we're not watching the markets at that time. And then right here, beautiful qualified sell signal right during our day session. And again, an immediate 2 ATR move, and then we'll take a look at where we are now. Let the balance run, take the balance off at market. So a little over $4,500 there over the last 7 to 8 trading sessions, swing trading that DSR. All right, now let's go take a look here. We'll go S&P 500. Let's walk through our indexes real quickly. I've got my fish alert against this current DSR resistance. So the DSR sets up. We had our beautiful swings right here. We went through our analysis a week and a half, 2 weeks ago. Dropped down here, had a long entry for a small loss. And then right down here, long entries. A long entry right here at the 1808 handle. And finally have rallied back into that 1866. So current position, A, buy the SPY puts. B, short from the 1866. Now, as we're driving in this rally, we pop right here and we go extreme overbought. Then we go bearish divergence. So this 1856 right here has now acted as support on the last 2 tests. So here's resistance. Once broken, support here, support here. So I've currently got partial targets right here at the 57.5, 56 quarter. And you'll note on the 1500 tick chart, we've also got a massive DSR level building right here as well. Okay, so target 1 on any short entries right here. The swing trade would be 1856, 50 to 57 quarters for 9 to 10 points. I'm short from around 575s. Stops at 68.50. So if we continue the power drive, I'll be taken out on stops. We'll make it through that massive DSR level, and then obviously off to new structure highs. Okay, so significant price point. Now, traders, here it's imperative that we look left and we recognize the spike high. So that's at 67.50. So I've got to expect the market will go and retest these swing highs right there, which is the high of the DSR level. Stops have to be above that level. And in fact, I'll probably go from 850 to 9.25 just to give it a little additional room. All right, let's go take a look. Dow Jones, same visual. Dow right against that DSR level. Again, we bought the diamond calls down here, bought the Dow Jones, beautiful winners, and now we're at a pretty significant price point. A break above 16,400s, and we'll probably make a quick move up here. One ATR would take us to 530s, 16,530s. So this is an active DSR level. We've already seen extreme overbought, higher low bearish divergence. So low risk short entries there. My intraday stops are at 402 and 406s. Okay, now let's come over here and take a look, go a little bit higher time frame. You see, I just saw this the other day and wanted to pop it out, but DSR levels on higher time frame. This is a 4-hour stock chart with Netflix. And you can see that we had structure resistance that became support right around this 320 handle. We had a turning point right here with a beautiful symmetrical double top at the 455 handle. We've now pulled back, and here is 3 drives to a bottom. We go extreme oversold, lower high. We go a new structure low, so there's 2. We've got bullish divergence on the RSI here. And then as we make our 3rd drive to the bottom, we've got further bullish divergence at, look left, gang, look left every single time. Previous structure support, anticipated support, DSR level, long entries right there at 320. Last week buy the 320 calls, and obviously here we're $28 higher. Pretty nice. Okay, let's go look at IWM. Key price points here. IWM's on a rally right here. Again, significant area. My last level of resistance at 115. If we rally here with a qualified signal, we'll look for short entries. We'll buy to the puts. Let's go look at SPY 4-hour. Okay, so right here we've just been killing it in this sideways channel. DSR setting our support levels and our resistance levels. Last time we bought here, then we looked at this rollover, and we dropped right into a 127 Fibonacci extension at a 50% retracement. We looked at the AB, CD termination point, and then we said if the market rallies here and it can hold this previous support, anticipated resistance, we were projecting 177.60s. You see that right here we went through the 184s straight north, and again, we're at a real key price point right here at the 187 handle. So just like we've seen in the S&P 500, spiders are going to test this previous structure resistance. My next DSR level, you see I've got a DSR minor in black, still an active DSR major in red. So anything against this 188.50 to 189.20, we're going to look again to buy puts. Now, note right here, I'm not at an extreme level quite yet. This is my 5x1 RSI at the bottom. Okay, let's go QQQs. Okay, so again, similar to the IWM, not much setting up right here. Beautiful 3 drives to a bottom. Right there was our 26.18 sell off the double top. 1, 2, 3. This DSR level was not active. Once this guy came in, this one died. And then again, we bought him here, profited here, and then it went to new structure lows. The DIA, however, the diamonds, beautiful qualified signal. We rolled right down into our DSR levels, bought the calls right there, profited here, and then again, on our 4-hour chart, gang, we've got no qualified signal. So again, if you're a trader, trading the swing basis and you're looking at your 4 hours, I've got no qualified setup. The best I can do is an aggressive trade against this previous structure right there. Now I can see, hey, on a 4-hour chart, the 164 is relevant. Then we can come back down and look to day trade it, get our trading signal from a trading time frame. Intraday, a 1500 tick, a 3-minute, a 5-minute. But right here, I've got no extreme reading here. I've got no DSR level. So again, this is critical to your trading plan. Wait and be patient. Quick look here, GLD. Yeah, not much going on there. We hit our ABCD termination point. That was a very aggressive buy signal. Yeah, right here. So from this swing, we came to here, outside return lower high to here. Then we said if this impulse leg down duplicates itself, where would we terminate? So there is our 1-to-1 measured move. We had perfect symmetry. Dropped right back into this 122.50 handle. So we've got DSR major in green, minor in blue, right here at the 123. So if we decline here, then we'll look for the long entries. Still relatively aggressive based on our RSI. And then finally, I've talked for a couple of weeks now about this massive level in the British pound, and you see we're still banging our heads against that 168. So a little refresher for those of you that didn't see, we'll go back to a monthly chart. Massive levels here. Right there's the 168, but again, stops have to go above that monthly spike high. So I'm going to pull in our data box, and you can see that the high right here was 170.42. So again, I cannot disrespect that 70.50 handle and expect to get short here against that monthly swing without putting protective stops above that high. Okay, now let's walk down from the monthly. Let's go down to our next weekly. Weekly, you see we've got a beautiful overbought, higher low, bearish divergence. And you can see our weekly ATR down here bottom right is 201. Thus, if I sell the SOS4 short entry here, my 400 pip stop puts me at 172s, which is above that spike high. And I'd anticipate a drive back down here for my first target. So risk 400 to make 400. We'll take it one step further, and then again, here is what the daily signal looks like. Now, we tested it here for the short, hit target 1, balance out on the trail stops. And now we've double topped again right here, the same visual price pattern. I talk about it in the turning point patterns of the initial training. All right, so right here, overbought, higher low, bearish divergence, sell them, target 1 attained. And here we've gone A, B, C, D, overbought, higher low, bearish divergence. The significance of that level, literally 7 or 8 year highs. Okay, so GBP USD short entries there. All right, now let's get into the real deal. There's the short on the Dow Jones. We popped to 397s, my 402 holding. S&P off to new highs, so we'll see if they drive these higher. And then bottom right-hand side, we're looking at our, look at the NASDAQ. So we'll probably go take out those significant swing highs. Your crude oil market down here, bottom right-hand side. Crude oil, pretty nice ranges, 250 to 270 so far. We'll look at long entries against the 220. And then let's check right here. We've gapped lower on the session. So my extended target on any long entries today against this 220 handle will be up into the 103.40s. June contract, previous close higher. So crude oil gapping lower. You see we've got our turning point black tip buy right here. There's our extreme oversold SOS1. There's my turning point SOS2, followed immediately by my black tip SOS3, buy next bar market. So 227s. So far we've only seen 11 ticks right there. There's the cluster sell, a 2-bar cluster. Okay. And that's again this sell right here with trend. but counter to the go trade. Traders, what we've just gone through here is a quick pre-market analysis. This is exactly what we do day in and day out in my live teaching and trading room. So if you haven't done so yet, sign up, grab that trial, come in and invest some time with us for 2 weeks. I want you to take my entire system for a test drive. I'll teach you my 2 or 3 most powerful signals. Look forward to working with you.